Wizards. Welcome to episode 15 of the Crypto Wizard podcast. Now, we have a lot to get through in this episode in terms of technical analysis. I'll actually be providing what would have been potentially a market breakdown with bits of market coverage via podcast. This way, no matter where you are in the world, it's Sunday, it's a day of rest, and although we have the weekly candle closure ahead of us, in just a matter of hours now. It's Sunday and many people like to just kick back and chill. And remember, although the crypto market is 24/7, it's always good to take a step back and just leave the charts. Although they are extremely erratic right now, it's always good to just take a little break. And again, it's a good way to digest the information via a podcast when you can just listen to it on the go, in bed, on the sofa, however it is you choose to listen and digest the podcast content. It's always good to do it on a consistent basis on the go. So having a look at the total crypto market cap right now, we've yet again exceeded the $300 billion mark. It's been a long time coming, and we've finally seen expectations met and exceeded, with that figure and milestone being met. And considering we're only halfway throughout the year right now, we'll be covering many more things regarding this very soon as well. So BTC dominance still fluctuating around that 58% mark. We're now at 58.5%, dropped a little bit from around 58.7%, but a movement like that isn't too drastic and will not impact the market in any means necessary. So looking at the market today, we're actually down 1.31% on BTC. We're up around 0.5% on Ether, which is looking to actually continue promising these continuous gains right now. Ether's actually been showing itself very strong during these current market conditions. So hopefully we can see that continue as well. So moving on to XRP, we're down around 2.10%, Litecoin's down around 1.16. Overall, we have the main movers, for example, that have slowly taken a little bit of a dip after seeing such significant returns. And now we have the likes of XRP looking to potentially pull back as well. So from a technical analysis perspective, what we are going to be shifting towards more now, seeing as we are seeing that break of $10,000, that is a major milestone and a very key level of psychological resistance. So seeing that level broken is of course a big region of concern in terms of looking at these downside levels now. They may not come through either as fast as we expected or ever at all right now. So I'm not saying they're completely gone. I'm not saying they're completely fabricated, because abiding by the principles of dollar cost averaging, you should have been buying throughout every single dip and pullback we've been covering all the way from the likes of the $6,000 region anyway. Although I am actually still not going to disregard any form of major pullback in the market, because looking at long-term trend lines and sustainability here, $9,000, $8,800, $8,400, $8,000 all still open as a major possibility. We are looking on a monthly Fibonacci here, a major monthly Fibonacci that finalizes the 78.6% resistance and retracement around $11,600. So until we remain below that level, you are still very open to seeing any form of significant turning point by the end of the year. Now, the way this could really be going right now, I do not necessarily believe, although there is that slight glimmer that it could be occurring, and you may see a bit of a slowdown. Unless we actually see the likes of $8,000 break, then it's not really too much of a concern to be seeing a significant pullback towards the $3,000 region. As we've started exceeding $10,000, we have to start slowly brushing away that ideology for the time being. Leave it open in case the market surprises us, but it's no longer a true moment of focus. So using the current charting and technicals we can see right now, we can see BTC has gone on a bit of an extended rally up to $11,200. So for me, looking at how we are just below that $11,600 region, I do believe it's opening up the slight possibility of price movement, especially moving into next week, to start consolidating and fluctuating around that specific region. We had one spike precisely to $11,200 and we've never returned, now remaining below $11,000 precisely. So it is working efficiently as a crucial level of resistance right now, and it should manage to sustain, especially over the existing short-term period we're seeing in the market. So I am remaining cautious. The market is looking like it could be doing some pretty crazy stuff very soon. I am feeling pretty content we may be seeing a potential pullback in the market. So when I say a pullback, I mean, even looking at the charts now, I think I'm going to execute a short-term short position. Let me just enter that right now. and execute that short. I'll set my stop loss very tight. This is just using BitMEX, by the way, so I'm just doing this live on the go. I'm just going to set a very tight stop loss above around $10,850, give or take. Very tight, not looking to take too much risk over here, to be honest with you, but that is what I'm aiming for right now. So looking at around $10,850, why would I put a stop loss there in the first place? The reason being is, if wick fishing was to commence and price was to continue higher, or even if we were to continue lower. Now, the reason I'm even looking at going short for the time being is because of one of the points I wanted to bring up in this podcast, and that is the art of hedging your trades and the art of actually having a correlation of a long-term HODL portfolio and of course margin trading along the side. Every time I give levels in the Telegram or the videos or the analysis, you should always be using this as a level of consideration. So let's just say we are overall right now in a bullish trend. That does not mean when I give these pullback opportunities and regions of interest, you simply go and close all of your positions, take out all of your holdings to USD, and then wait for a potential pullback, because nothing in the market is guaranteed. You should never be going in all guns blazing trying to catch crazy pullbacks in the market. By all means, the way I actually hedge these kind of opportunities and minimize risk by all means necessary is I am always having trades running in the side, or I have my long-term portfolio running in the side to accommodate for any losses in the market. So a good example would be in these current market conditions of a bull run. You should have been buying, if you've been following the Wizard principles anyway, every single consistent pullback that's been covered. We've seen pullbacks spanning several hundreds to thousands of dollars all the way up to this region. And although we haven't fallen to the likes of 8,000 yet, or the likes of 6,000, or we didn't even touch $3,000, you should never be leaving any form of analysis to fate. You should not be just simply doing that and just sitting there waiting for it to happen, because you are missing all of the key price action in between and far from the actual movements we're looking to capture. So looking at this current market condition, I've had longs running for quite a while, whether that's been physical or margin. There's been a lot of long positions running overall. So whatever I've been doing in terms of catching counter trend moves, and the reason I've provided wick fishing, for example, or regions of threat, is because if I identify these potential regions and know they may be coming through very soon, I'm more than happy to enter a short position, for example, to catch the opposing move in the market and then leave a fairly tight stop loss. So the minute it starts breaking into my favor, I move it to break even, and then that way the trades that are running long are okay. If price pulls back down and we see a correction, the short trade has gone into profit. It's now pretty much counteracted any loss I would have made on a long position, because the long positions are still running. My physical portfolio is still running in the background as well. And all they've done is taken a little hit in unrealized profit and losses, because I haven't closed those trades yet. That is how you do it. But yet the short position, because it's fallen lower, or because it fell lower, sorry, because it's gone lower, I've closed it out in a profit. Meanwhile, I still have my long positions running, which if we do see a correction now and a continuation further upside towards the trend as a good example, my long positions would then just continue flowing beautifully in profit. So it's all about actually understanding how hedging works and understanding that you can enter short and long positions in the market. And it's something that I do to actually counteract and aid myself in suffering drastic losses in the market. Because in a crypto market as wild as ours, you have to realize there is a big ideology that you cannot count or capture both moves in the market. You cannot go short and long at the same time. You have to just place one long swing trade and let it unfold naturally in your favor. Unfortunately, in a market as volatile as this one, if you've seen from the Telegram already, you have to be volatile, you have to be quick, you have to be switching biases in an instance. It's very easy, and again, it's very hard as well at the same time saying this, for me to identify an opportunity that's very quickly moving in this market. Let's say a short opportunity arises and I enter short. By the time I've even managed to update the Telegram and executed the trade myself, price could have already moved an extra $50. So it's very hard to get that synchronization optimal. So it's always there within the second I've entered a trade. However, there are times where price can move even in the time I've executed, set a stop loss, adjusted my trade, sorted out risk management. By the time I've done that and come to the Telegram, even in less than a minute, it may have already moved quite drastically. So it's always good to take all of this into consideration, especially when you're looking at the levels yourself as well. Remember, the goal in this market is not to get wrecked. You often hear the terminology wrecked. The truth is, when you're getting stop losses hit, you can have 5 in a row hit, but if you're controlling risk management, you are never truly wrecked. Wrecked is simply a terminology for people who do not really have much of an understanding in the market. And to be honest with you, people that use the term wrecked, they very likely get wrecked themselves and do not know any other means to trading except for getting wrecked. So let's just say you place a trade, it goes wrong, and they say wrecked. You cannot be wrecked if you've placed a stop loss and you've calculated your loss. The problem is with wrecked in this terminology, it can be very detrimental to many of you because you see people being called wrecked every time they lose a trade. And psychologically, that could definitely impact you as a newcomer to the market when any form of loss is looked at as a major failure and you are looked at as a failure or a bad trader. Do not ever fall into that category because as a newcomer, when I first started in crypto, wrecked has been around for many years now, so has FOMO and FUD. They've only become progressively meaningless as time has passed. So putting all of these into consideration, the people that get wrecked are the kind of people that trade 50 to 100 times margin on BitMEX, and they just leave no stop loss and they just get wrecked because they put their whole account on the line to simply run a single trade. So taking all of that into consideration is most definitely wise. By following the principles I abide by in the Telegram, you'll quickly realize that any form of movement, whether short or long, is simply another hedging mechanism to counteract the existing overall trend. You should never be going against the trend. That is why when we do see pullbacks and potential moves in the market, we always understand that they will not go much further once we have met the peak of that movement. So a good example would be for me right now, let's just say XRP or BTC first of all. Actually, let's just say I'm targeting any potential threats to the likes of $9,600 all the way to around $9,000. Once we actually hit that $9,000 region, that is where I wouldn't necessarily always go short to that region, but I would leave my long positions running and actually sit back and wait to see if it moves. If the potential move was going to come through, I would have stop losses tightly in profit anyway. So if price pulls back from, let's just say where it is now, from $11,000 all the way down to $9,000, my stop loss would have likely wiped me out around $10,400 to $10,500 anyway. So upon seeing that, I've now closed out all the profit from a long trade. Price has now dropped all the way to one of my next premeditated and preempted levels of potential manipulation and wick fishing. Once it's dropped down to that region, I can start anticipating long positions again. You are simply closing out trades in profit to then capture the same move all over again with pretty much more profit coming from it. So taking all of that into consideration right now, what is going on in the crypto market? We've got the weekly candle closure. It's been an incredibly bullish week. So for me right now, the next upside targets, they're still fixated on the likes of 57 cents for XRP, and for BTC, although I'm fixated on the likes of 11,600 as a very crucial region where any form of manipulation or sharp spikes can occur, I think we're pretty much looking at the likes of even $12,200 to $3,000 very soon. So again, looking at the $11,600 region as well, which is of course a crucial level, guys, if I may add, a crucial level because of that monthly Fibonacci. For all we know, price could have simply driven all the way up on a long-term perspective up to this monthly region of $11,600. I'd never even taken this into consideration before. It's literally fallen just short, which tells me it could very likely meet it and spike it in a very quick movement before reversing back to the downside. Now, despite the Fibonacci extensions on that monthly perspective showing the likes of $800 being met, that's not very realistic, but it could aid in a potential downside shift. Now, if you actually remember in the beginning of the year, I said around May 2020, I believe would be the period we break all-time highs due to the BTC halving. And of course, I believe the bull run will actually commence fully in 2020. So of course, a lot of this has actually been a little bit unexpected, and I did not really believe the market would be blowing to these proportions it has as of present. So with all of this taken into consideration, and with that huge weekly candle now closing just below, it is very likely and fairly good reason to believe we could be seeing that extension to 11,600 by the end of the week. And then from there, I believe it could be a very rapid turning point if that level does hold. But in saying that, the market has driven pretty nicely already. So if you're following the monthly principles, again, another critical level and arguably the final barrier that would confirm any form of final movement is 11.6. So keep 11.6 on your radar if you're going for some intraday movements over there. By all means, stay a bit fixated on that level because it could come through in a very fast manner. But besides that, if that level gives way, guys, we're just looking at 12,000, 13,000 next, but in particular $12,300 to be a bit more precise. And for me, the $13,000 region is a bit more of a key psychological level, pushing up to $13,600. So I'm just kind of keeping my eyes now on that monthly Fibonacci level. I've never seen a monthly Fibonacci level this large. For all we know, it could factor in a huge swing. So do not disregard any form of downside possibility. They're now a bit more unrealistic and not as possible in terms of percentage-wise and probabilities, but anybody who disregards any form of opposing movement in the market, I'm still very confident that there could be a surprise move to $6,000, and that would wipe out 50% pretty much of the current pricing we've already seen. So people never believe that there can be huge corrections like this in the market, but we have not seen a breakout of all-time highs yet. So as of now, we're still trading in between, and we're currently 50% give or take between the range of where price broke out up to all-time highs. So we're fluctuating exactly where that 78.6% Fibonacci is. We're fluctuating in the middle now of the trading momentum from the highs and lows. So if that level fails to break, we could very well fall down to $6,000 where the market could begin consolidating. So even $6,000 is still a very big possibility. Do not try and short down to that level unless you see the likes of $11,600 rejecting. But for now, $600,000, there's a massive inverse head and shoulders on the monthly as well on the weekly. So price could very well, if 11.6 fails to break, just consolidate down that region. So it's always during those moments where you start seeing a point of time extend, or the period of time you're holding an investment or waiting for a target to come through, it can seem like it's no longer going to happen and it's very unrealistic. But in saying that, again, a perfect example was the failure to break $10,000 and around March 2018, and then from there, after calling the $6,000 floor to break, it took until November. That is a horrific amount of time to wait for a single call to come through. But despite the market beliefs and the bottom allegedly being at $6,000, the floor absolutely annihilated, and then from there we pulled up to around, well, we actually pulled down a bit lower to around $3,000, where we've now seen our progression higher. So even when these situations become a bit more unrealistic and the probabilities do not match up as strongly as they once did, please never disregard the possibilities, because I'd much rather know the possibility can occur, and then when it does happen, none of us panic and none of us go, oh no, the market's over, it's dying. No, instead you're prepared, you've understood that this was a likely scenario. Then when it does happen, that's it. We can then move forward from there and start projecting potential moves in the market. Because when you see a huge correction or a huge turning point in the market and you realize euphoria is slowly dying down, there are many situations where people lose a lot more money. Because again, we're at that point in FOMO now at all-time highs. Everyone's buying now because they just think it's going to go on forever. But we haven't seen a single pullback. And as much as we believe there isn't going to be a pullback, it always does. The same way the bear market came, we're seeing the same euphoria now as we did see in 2017. Although it was a bit stronger in 2017, thanks to the ICO craze, you are seeing the same personality traits go online. Just by reading people's tweets, personality styles, the way they're tweeting, what they're kind of exaggerating, you can see very clearly now that euphoria is very strong. So it's at this point now where 10,000's broken, that psychological level. The retail traders will slowly but surely start jumping in soon. So putting all these factors into consideration, what is really driving this surge right now? I'm still not confident that this surge is actually a responsibility of institutional capital. And the reason being would actually be the 100 million USDT that was minted at the Treasury June the 21st, which was of course 2 days ago now, conveniently before price decided to absolutely annihilate the wall of around $9,000. So around 9,000, let me get the precise level up. I think it was around $9,800. From there, we've jumped straight to $11,200. Conveniently, on the same day, Tether Treasury decided to print more. Going back a few days prior, they printed another $150 million. And to be honest with you, in a current market that only is worth around $300 billion, that's still a fairly significant amount of money to be influencing and dropping on the market. Not to mention 2017, the majority of the gains, despite the craze for buying and selling Ether thanks to ICOs, the majority did derive in actual fact from Bitfinex and Tether, with the joint influence of market manipulation. So putting all of that into perspective, many people are looking at this as institutional capital, but if the institutional capital was here, we would definitely know about it, believe me, because they are the reason and the main factors we need to actually influence price to move further. If you actually look at what price is doing now and you actually look at where we are in the market, when you consider that institutional capital would be involved in this market, we would be much higher than we are now, because all of the capital from 2017 is still lingering in this market. So you would need a whole new wave of fresh capital to actually booster, that was a weird word, to bolster this market further. You would need a whole fresh wave of new capital before we could really consider pushing this market further. So as of now, all you're seeing is the existing figures in this market, give or take a few new entities that are pushing price higher. But overall, institutional movement in this market would have driven price way further than what it existingly is right now. So when you put this into consideration as well, we're looking at many other factors that could even aid. That's why I'm saying just keep into consideration $9,000, $8,000, $6,000, because the first half of the year has been incredibly bullish. So with 6 months left on the clock, we are looking at potentially seeing not a bear market, but I'm still very open to this possibility. Unless that Fibonacci gives way, these are simple rallies for me. So do not try and short the market, do not do anything crazy, but just remain a bit open-minded that all of these things can happen in a moment's notice, and it can come as a very large shock. And again, it will be only us that are prepared. So continue right now buying these dips. It doesn't even matter right now. Although you don't want to be buying at highs, when you consider where price has been before and all-time highs, it's still an excellent opportunity even in these moments. If you're going for longer term trades, to dollar cost average at every single price anyway. Do not feel that when it comes to trading, you have a margin trading in particular, you have to be a little bit more precise when it comes to entering and exiting trades, finding the right locations, what to buy and sell, for example. You have to be a little bit more fixated and cautious on what you're doing. But when it comes to hodling long term, now the terminology hold on for dear life and whatever, I'm not really a big fan of that term. To be honest with you, I think it's very misleading because it only is effective when you're in a bull run. When you're in a bear market and you've bought at all-time highs and you want to hold on for dear life, it would be wise to just cut your losses and simply buy in at a cheaper price versus holding on for an entire bear market. Look at all the people now who bought cryptos at all-time high and didn't even dollar cost average the whole way down. All they're simply doing is sitting idle like ducks, waiting for price to return back to where they bought. So HODL is a bit of a hit and miss. I'm actually covering a bit of that in the Wizard course as well, just regarding the term HODL and how it can negatively influence many newcomers to the market as well. So in saying that, I believe when the institutional capital does come, it will present itself very evidently on the market. So in saying that, what happens now? Let's just say, first of all, I think price is about to go higher as we speak. It's around 6:22 p.m. here in the UK. Price is around $10,725. I wouldn't be surprised to start seeing that wick fishing or breakout attempt to the likes of first $10,900, just a quick little region to test and experiment if it holds any validity. And then from there onwards, we could be looking at the likes of it breaking out, which for me is around $11,400 to $11,600 as a crucial region of interest should price begin to spike higher. So $11,600, I want to see that spike either by the end of the week or we start seeing a slow progression. So looking at the current weekly candle, it's looking very strong, very, very strong, which only means the next week may see a slight pullback, which means by the end of this week, hopefully we can close a bit higher than where we are, either around 11.2 where we peaked or even a bit higher. That would lead to a very nice pullback next week, hopefully to around, let's just say, $10,900, $11,000 again. Push up that little bit higher if we can hit around $11,600, and then hopefully identify what happens next. Because give or take, I do not think we'll be exceeding all-time highs this year, even if we remain in this current bullish rally. I think if we're looking at BTC in particular, let me just whip up the chart over there as well. When it comes to BTC, I think where we'll be peaking by the end of the year, if we do see a bit of a continuation, I think price will begin to either steady down, hit around 6,000, and then slowly build its way up again. So I'm in a very split decision on this market because I do not think we'll be exceeding the likes of $16,000 in particular by the end of the year. I have a bit of a big focus on $16,000, 15, 16. I feel like it won't be broken this year. I feel like as we shift into 2020, if we do continue with this bullish bias, then from 2020 onwards, we'll start breaking out of $16,000 and then just annihilating those all-time highs. So that's the biggest focus for me right now. But then looking at these Fibonacci levels, which are currently holding, looking at the retracement of this monthly, even if we were to pull back to the likes of $6,000 and then maintain this level, it wouldn't really be a region of caution. It would actually make perfect logical sense to meet the final shoulder that's remaining to be formed on the inverse head and shoulders on the weekly for BTC. So again, I'm remaining very open to that possibility, because anyone that's really buying all-time highs now, the reason I'm not buying at all-time highs is because I've been trying to convince everyone as well, not convince, but just show that the reason I was dollar cost averaging throughout the whole of 2018 is because of these moments here. There is no more need to FOMO in at all-time highs, because anyone that tries to jump on the hype now when there is a clear level of support below that could very easily come through even in a single sharp move would lose around 50% of their entire holdings in any given moment, or even in a single span of a week or a month if this was to come through. So that's why you dollar cost average during the bear markets, you buy the dips as you start coming up towards those levels, but when you start nearing 50% of all-time highs or even higher again, you shouldn't really be buying at this point. And the only reason you should be buying is if you're a new participant to the market, because at that point you don't really have a choice, and it would just be wise to do that and then average your way down if price begins dropping a bit lower. So looking at this overall, I think we should be within the region. Hopefully we'll see how this next week or two goes around $11,600. Could even see it drive up to $13,000, then pull back below. So again, big caution on these weekly candles now. As you've noticed, because of the strength and the size of these movements we're seeing, it's very likely there's going to be a lot of weekly candle closure focus and predominance before we can start deciphering what's happening next. So looking at the current overall yearly outlook on this right now as well, let's look at Libra. Everyone's talking about Libra. Even the Binance CEO said, who said Libra isn't bad for crypto? He's like, let's get everyone in first. And I couldn't agree more. There is so much focus on fixation on kicking people out the market or not having these entities here and there. Do you know what? Let them join the market, let them get involved. The more we have these mainstream or institutional platforms, or anyone that has any form of influence in the public eye, let them join, let them commence. Even if they give it a negative outlook, the truth is there's no such thing as bad publicity. And I heard that from Wolf of Wall Street. It's stuck in my head. There is no such thing as bad publicity, and that is the truth. It doesn't matter if, let's just say, one of the biggest scammers in the crypto market got severe bad publicity, because at the end of the day, look at someone like Craig Wright. He is known as a very confusing and manipulative person, so to speak. That's just my opinion anyway, and a bit of a liar, but the publicity seems to work in his favor every single day as he's hitting those headlines continuously. Someone like John McAfee, I don't even know how you say his surname, but John, the legendary man, John himself, use him as a good example. He had such bad criticism, and I guess all the media outlets were covering him as a troll or a shill, all of these crazy crypto lingos that you hear. He was being covered as that specific man, but yet whenever he pumped and dumped a crypto by saying a single word, he was everyone's best friend. So you have to look at this in that perspective, that any form of entity that joins the market right now is a positive. We want as many people as possible in this space, whether they're trialing, testing, adopting, experimenting, or any form of negativity even, let them join the space first. The more people we have here collectively, the more people that will remain. The higher we have as a percentage or a collective of people involved, that means even when you drop off 5%, the more people there are in the market, the more people that remain after a certain amount of people drop off. But realistically, we know the space is now here to stay and grow. So anyone that is here in the present time being, or anyone that is remaining in this market right now, we know they are likely going to be here for the existing long term as well. So only regions of caution for me yet again, just to throw it out there. Look at $6,000, just keep it in your mind. Nothing to really worry about now below $6,000, but it is most definitely in my mind that that level could be met again, especially when you've seen the significance of the initial breakout. The only reason I was even projecting in the prior breakdowns that $3,000 could commence, because if we do see a bear market by the end of this year or from now onwards, then price will very likely, in a bear market, if we were to shift right now, then it's almost guaranteed price would fall back down to around $3,000 and beyond. And that's because there's a major monthly trend line in play. So if this monthly Fibonacci holds, that would also confirm the monthly trend line would hold as well and come into validation of $4,000 to $3,000. So I'm not saying it's going there now. I'm not saying to short it or do anything crazy, because I've realized people can misinterpret what I say and then try and catch huge trades down to these specific regions. So please do not go and do anything crazy, because we're right now in a very bullish market. And a key word to mention here is people keep asking me, is this the bull run? For me, this is not the bull run, this is a bull run. I do believe the bull run will fully commence next year once we have broken through all-time highs. So that's my main focus, breaking all-time highs, retesting $20,000 and absolutely rocketing to the likes of 26k next and then 30k. We'll see from there what happens next. But for now, stay focused on the current fixated price action. It's looking more likely for now. We could be seeing a few more attempts to go higher, but I am looking and very open to the possibility and awaiting BTC to fall back down to around 9k, down to around 8,400 in any form of surprise flash move. A quick $2,000 drop, give or take, would be very beneficial for the market and aid many of you to catch and accumulate even more crypto at a better price. But for now, let's fixate on the long-term target. So the upside, we're looking at $11,600. If this level can hold, then by all means, we can start anticipating pullbacks. But if you start seeing that level break and give way, then guys, it's time to pack ship and get ready for what could be another very interesting ending to the week. So guys, that is it for this podcast. I hope this has explained things in a little bit more depth, and especially when it comes to profit taking as well, utilize these levels. It doesn't matter how much price rises now. We saw when we got to the likes of $9,100, I was warning you guys to take some profits in the event of a pullback. Price dropped from $9,100 all the way down to $7,500, a huge saving spanning several $1,000s. It does not make sense to continue holding the whole way through. If you have some very, very low buys and you're now in significant profit of several 100%, there is no need to be greedy and feel bad for taking profits, because you never know when the market can turn around, and it's proven itself to do so many times over. You should never feel bad for missing out on taking some profits. As long as the profits are realized and they've hit your bank, that's much more influential, much more important and positive on your emotional well-being versus having unrealized gains spanning several hundreds to thousands, hundreds of thousands or millions of dollars, only for it to come crashing down and soon become realized losses. It's not effective, it's not beneficial, and it means you're just wasting your time in the market. Everyone talks about HODL, 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 but the truth is those same people that HODLed bought at all-time highs, and they are suffering a very unfortunate fate right now, and they are still nowhere near even break even at this $11,000 milestone. So fixated $11,600, hopefully coming through soon. So let's see what happens in the final hours of this week.